Okay, you're welcome back. Let's start with the week's hottest stories following the MPC meeting that was held on the 24th and 25th, where the Central Bank of Nigeria has retained the monetary policy rate, that's the MPR, at 27%, holding its tight monetary stance despite growing concerns from businesses and households. At the 303rd MPC meeting in Abuja, members voted overwhelmingly to keep all key policy parameters unchanged, including the 45% CRR for banks, 30% liquidity ratio, and an adjusted plus 50 per 450 corridor. Governor Olayemi Kodoso said the decision reflects confidence that earlier tightening is beginning to moderate inflation and stabilize FX liquidity. Now, new MBS numbers show headline inflation eased to 16.05% in October, down sharply from 18.02% in September, while the Naira recorded modest gains ahead of the meeting. However, borrowing costs remain extremely high, putting pressure on businesses, even as the CBN insists the stance is necessary to control prices and support investor confidence. Daniel will be joining me on today's show. Daniel, are you here? Good morning.
Good morning. How are you doing today?
Okay, it's good to have you here today. Good morning. With inflation easing to 16.05% and FX liquidity improving, why does the CBN still believe that a 27% benchmark interest rate is necessary? And do you think that this tightening is not hurting borrowing, investment, and job creation more than it is helping price stability?
Oh, okay. Okay. Thank you for having me. I think the conversation has been very dynamic when it comes to the CBN, and I think that when it comes to the MPC, and I think that last time we discussed it during the September MPC meeting, there was the conversation was clear that the decisions of the Monetary Policy Committee is one that cannot be completely orthodox in the way we interpret it, right? Because when you look at it, when you look at the dynamics around macroeconomic conversations, when you say inflationary pressures is coming down, normally your rates should follow suit, right? But yeah, it's a different ball game, and the motive and the end game of the Monetary Policy Committee is trying to achieve a lot of other things, right? Which is not just inflation targeting, right? First things first, let's look at the data from MBS. MBS is saying there is a decline in inflation, right? There is a consistent decline in inflation. However, the current data, right, from MBS actually did show, even though we are in a deflationary era when it comes to food inflation, it did show that there was a sort of inflation in food, right? In September, it was around maybe negative 2.37 or thereabout. And the data that we have now for October is about around negative 0.3 something, right? So 37 or thereabout. That means that there was an uptick in prices of food in comparison to the previous month, right? So what is this? What is the Monetary Policy Committee saying? They are saying that yes, we recognize that inflationary pressures is decelerating, right? Inflation is coming down, even though the pace at which it is coming down is not a function of is both a function of what we are doing at the Monetary Policy Committee. It is also a function of the rebasing that had happened. So because the rebasing is touching the figures, but not the effects, right? So what we can only do is respond accordingly, which means that we can only wait and see if this decelerating continues, then we can now emphasize on rate cuts, right? However, there are so many other decisions that was made there that, of course, they retained the CRR, but they also limited the asymmetric corridor to about, I think it's now, I think it's 450. I will check now, maybe when you're asking the next question.
Okay.
So reason for doing that is that because from last MPC meeting where they introduced a liquidity ratio, right, for cash reserve ratio for funds of special agencies to also manage liquidity, right? They've also limited that to ensure that they keep managing liquidity while we are still monitoring the inflationary pressure, right? Because what we don't want is, yes, we want cheap cash, right?
Yes.
We want cheap cash, and when I was checking the data from the banks, right, cash is not as expensive as we thought it is. It depends on the sector you're trying to search for cash. Because now, see, the CBN released data about what is the rate your bank is lending you
Lending
money,
you.
right, per time, right? So that data now shows that it ranges between, there's no fixed data, there's no fixed interest rate for banks. It's based on the sector, that based on the risk and the sector, and peculiar to each bank, right? So we've seen rates grow from 10% to 60% based
60%.
on the bank. So
Okay.
when so it is not as hurting, right, as we're saying, even though we want the interest rate to come down. But remember that the CBN also is trying to manage liquidity in terms of FX, right? The stability we've gotten so far is because we've gotten a lot of cash from FX,
Okay.
right?
So
Stability we've gotten so far. Yeah, go ahead.
speaking about lending, right? Businesses are already
Yeah.
battling lending rates of 30 to 35% above from commercial banks. Now, at what point does the high MPR begin to choke real sector, like especially the MSMEs, and is the Apex Bank rising or risking an economic slowdown in 2026?
Well, I think the time of risk is already over. It was being risked last year. It was being risked in 2023, right? Uh, Inflation and high interest rates are two killing indicators when it comes to businesses, and I think businesses have seen the worst of it, right? I think we cannot have an increase in interest rates in the short term or medium or even long term, right? What we would see is in this decline in interest rates. But what we are simply saying is that the CBN has looked at the figures, right? That stability in exchange rate plays a major role in our inflationary pressures, right? If there's been a stability in interest in the exchange rate for the past 18 months, and we've seen consistent decline in inflation, why not just keep it that way? Right. The only way they can keep it that way is when more money keeps coming in. How do more money keeps coming in? Through the high interest rates that we have, that portfolio investors would come in. So we don't want to chase them away for now. We still want to attract those funds going into the first quarter of the new year, right? High interest rates into the new year is a good figure for major investors across the globe, because when you look at the interest rate trajectory across the globe in 2025, was about interest rate reduction, right? Because everybody's trying to expand the economy, right? So we still have one of the highest interest rates in globally, which means that we can attract more funds going into the new year, right? While in the new year, from February downwards, we can now begin to cut significantly, right? So because then, if we had cut in November, we would have been faced with a lot of pressures. Liquidity would reduce for FX going into the end
FX,
of the
yes.
year, when a lot of people are demanding. You get for products, there is a demand surge that comes in this period. And another thing is also the fact that portfolio investment are taking their funds out, right? So because everybody has made money, there is a CGT that is coming that people are still unsure of. So you don't want to you don't want to add to that uncertainty with an interest rate reduction, a significant one. But of course, I'm predicting that if we continue decelerating as we are with inflation, whether it's the food and headline, we will most likely have a very big 250 basis point rate cut in February. But for now, I think it is easier that the MPC would wait and see what happens in the next couple of months.
Okay, so the CBN says holding the rate is needed to anchor market expectations. But we have
Yeah.
some analysts that are warning that the prolonged squeeze could weaken growth. So in your view, what concrete indicators should Nigerians watch for to determine whether the tight stance is still working or whether a cut is really, really overdue?
So we know that the cut is overdue, right? But there are peculiar issues, right? And the peculiarity of the issues is this kind of economy that we have, right? Because in the first place, what informed the need to even increase interest rates in the first place? It was the inflation, right? What kind of inflation? Supply side inflation, right? So if you say if supply side inflation means that inflation that was basically caused by your supply chain disruptions, right? And the only way you can balance that conversation is through cash. Have more money, right? And your goods are cheaper so that people can still afford what they were able to afford, right? We've went through errors in those transmission of those policies, and we are where we are now, right? But the only thing that we can do now is that we cannot lose both sides. We cannot begin to drop interest rate drastically, and we now lack liquidity for the exchange rate. That has kept inflationary pressures down. So if we do that, we will lose on that way. We are not yet balanced enough, right? The only thing that gives us a large revenue in dollars right now is Dangote refinery, and that is a very very big risk to depend on, right? So you should have portfolio investments if coming in before you say you want to start building your structures enough to have FDIs. At least let the FPIs be sustainable. Let them keep coming in while you're able to balance your economy, bring inflationary pressures down. Let your people, the demand from your people rise. Then you can now begin to now sort all those. So
Okay.
the CBN is just trying to balance, is working with what it has as a tool to help the economy. That is what they have done. To be very honest, they've done it very well. And kudos to them. What
Okay.
we are really expecting is that going into the new year, we see the fiscal side also balance up so that we can have a very
More
robust
balanced.
economy in 2026. Yeah.
I get that. Okay. We're going to be talking about CBN a lot today. But while the CBN believes holding the rate at 27% is the safe path to stability, many analysts argue that this prolonged tightening may now be doing more harm than good. This is taking us to our next story. Following the rate hold, several economists and market watchers warn that maintaining a 27% benchmark rate could slow Nigeria's growth momentum in the coming quarters. They argue that although inflation is easing, the cost of credit remains prohibited for manufacturers, SMEs, and the productive sector, which already face FX scarcity, weak demand, and high operating costs. Analysts also note that, with unemployment rising and consumer spending weakening, the economy may struggle to expand if monetary conditions remain this tight for too long. While the CBN prioritizes inflation control, experts are urging a gradual shift toward a supportive stance, especially ahead of the next MPC meeting in February 2026. So, Daniel, as analysts are saying that the cost of continued tightening may now outweigh the benefits, do you agree that maintaining a 27% MPR could slow down real sector growth? What do you think of this?
I think it is a two-way conversation. Good. I think real sector growth has been down for the longest. GDP figures shows that we've had negative performance in at least majority sectors, right? The most important sectors, for example, have had negative growth. Agriculture was started recovering, I think, in the second quarter. I think that I don't think the current rate is the highest in quote in terms of comparing to inflationary pressures, right? I don't think it is the highest, right? We've had again. So the phase we are in is an economic resilience phase, right? We've passed through the worst times, and that is the point. Uh, what we have done right, we don't want to spoil what we have done right, right? So this is probably the first year. If by the time by next month, we probably had the first year in almost a decade that we've had rates stabilize between 1,500 and 1,420 for a year, right? So, and this is one of the key things. We've seen the same thing with petrol prices. Petrol prices has also ranged they've been stable for that long, right? We've had less scarcity, we've had less issues that would cause disruptions in the economy. So, one way or the other, the balance is what the MPC is still maintaining, right? Yes, interest rate is high. I've always complained against rising interest rate because now, when you look at the rate of return, that's the inflationary pressures minus the interest rate, is almost 10%, right? But, or even more than, but the conversation still lies that the CBN has done something right and is sticking to it at least to the end of the year. If there was an MPC meeting in January, I'm sure there will be a rate cut in January. But the next one is in February, and that is just a 3 month break while they are able to still manage their liquidity. They've done a lot in managing liquidity, and I think even the CBN governor mentioned about the fact that they've been able to clear backlogs. Yet businesses are able to bring in funds. December, for example, there will be a dirty December in code that is a big wave that will still attract a lot of inflows. So let them do what they've been doing. They've created a balance into the new year. Let portfolio investments even come because now you are expecting 27% of quotes in bonds, in bills. That is big numbers, and that is around, that's a range. We've seen the current bills go as far as 22%, 22% right now. So that is what we are looking for into the new, more money. When they come in, you can
More
now begin to
money.
cut interest rates, and that is what will still help the real sector, because real sector is largely dependent on dollar in quotes, right? So, and that will help the real sector to still stabilize till we start getting into an expansionary economic phase.
Okay. And while the MPC decision signals restraints on interest rates, another major development shows just how aggressively the CBN has been tightening liquidity behind the scenes. This is taking us to the next story, where the Central Bank of Nigeria intensified its liquidity tightening operations in 2025, issuing a 17.59 trillion naira in primary market debt, while settling 14.72 trillion naira in repayments between January 2nd and November 21, resulting in a net liquidity absorption of 2.87 trillion naira. Monthly activity showed an aggressive start in Q1, with over 3 trillion naira issuances in February and March, followed by a stabilized mid-year and a near balanced issuance to repayment pattern to November, signaling a more calculated strategy heading into year-end auctions. That brings me to you, Daniel. Is Nigeria entertaining the new cycle of unsustainable debt, given that government has already borrowed more than its full-year targets by over 4 trillion naira?
So when I saw the figures, I was really it's really scary. I think that our debt stock is not being properly managed, and I think the CBN also is playing a major part in that. Yes, like we just discussed about why the interest rate is still high. That is another big disadvantage of your interest rate being too high, because you would be paying very high interest on your debt, right? And because what we have is not FDIs. FDIs will keep coming in and will keep increasing our debt stock, right? I think what I personally would look at, because I understand what is really happening. What I will be looking at for is what we do post 2026. Are we still going to be this going on a borrowing spree as we are doing? Because by 2026, when we got into an expansionary phase where we are seeing more of dollar inflows from exports, from FDIs coming in, FDIs that have been agreed on coming in, more activities from the refinery, and our trade bill becomes more positive. Then I'll now get then it will be easier to make a conclusion on why we keep spending this much, because,
Okay,
or why we keep borrowing this much,
this
because
much.
the figures are alarming.
Yes.
And if we cannot say is bad or good until we have seen what those borrowings are really doing, in terms of we get what it is doing on the fiscal side, before we can make conclusions. But as an overall outlook of it, it is way too high, and might end of the day even get us to a fiscal problem in the
Okay,
future,
so
when
so
we have too many high rates to pay.
okay, so with 2.87 trillion naira in liquidity that is absorbed so far, how do you think these aggressive debt operations affect credit availability and borrowing costs for Nigerian businesses?
So I think that the CBN has been managing it effectively. I think one of those things is the fact that we've seen how the CBN has tweaked liquidity conversations in recent times. Even from the recent policy, we now see that what's the word? The CBN has also, how do I say it, has also kept the amount it borrows banks quite low, right? And also kept the amount banks also get from keeping money with them quite very low. Why? Because then it doesn't make sense. What it's simply saying is that this is the time to use your money, right? Use your money, increase your real sector participation the more, right? Yeah, give out more credit, and that is what is basically happening. Of course, we know that the CRR to non-TSA public sector deposit is still high, but the one to venture bank is now low. You get the one to deposit bank is now, so what it is what the CBN is saying is that we want you to direct it to certain places. It should not just be right now that you're trying to capitalize, you're trying to hold on to funds. No, make
So,
good use of
so do
the
you
funds you
think?
have in terms of economic
Okay,
expansion. Yeah,
so
go ahead.
do you think that that there's going to be a way out and a better management of assets and liquidity?
I think these are the things we will still find out. Like I said, 2025 is like that year that you want to see. Okay, the worst has happened. Everybody's the
Now
rain has
waiting
the flood happened. Everywhere is dry. Okay, let's see what happens
for
next.
the
So I think
next year.
2026 really gives us an idea of what the CBN has been doing, what the effects would be, and how it will manage. Because then we know no single monetary policy or even a fiscal policy is every policy, every of those policies are two-edged, right? So like two-edged sword. If you cut one, it's the other one is getting affected. But what happens is when the other ones get affected, how do you come out of it? Because what we've done with high interest rates is incur a lot of debt, right? Okay, now that we've incurred the debt, what are we going to be using those debts for, right? The credit ratio, the credit reserve requirements that we are allowing banks to borrow to give out credit. Are these credits being given to the right industries, right sectors that will come out to get to improve the economy? So those are the conversations that this would be bringing up again in the coming year.
In the
But for
coming year.
now, we are only faced with what we can see, and what we can see is that we need to bring down the cost of living and the standard of living of people, which is inflation. And the only way we can keep doing that is by increasing supply of local of those products that people demand a lot, and also stabilizing the exchange rate.
Exchange
CBN has
rates.
done that. As CBN has done the second one, now it's just the fiscal guys to do the first one, so that people can have more to spend. Because businesses, as long as people can buy your product, you will keep surviving.
You keep
You keep getting
surviving.
credit to surviving. Exactly. So that is what
Okay,
we need,
that's
right?
true.
Increase demand, increase local demand of products from the people. Let them have disposable income to invest more, to spend more. Then every business can begin to pick up from wherever they've lost business due to the high inflationary pressures.
Okay, so and while the CBN's decision to hold the MPR steady dominated the headlines, which it because it did, the bank also unveiled a major update on its ongoing recapitalization drive, which is an update that signals even bigger changes within Nigeria's banking sector. This is taking us to the next story, where the Central Bank of Nigeria has said also that 16 banks have now met its recapitalization threshold, which is an improvement from 14 banks that was recorded at September's MPC meeting, which showed rising compliance ahead of the March 2026 deadline. And CBN Governor Cardoso said most financial soundness indicators remain within regulatory limits, and the recapitalization program is strengthening the resilience of the banking system. The reform requires banks with international licenses to raise 500 billion naira, while those with national licenses must raise 200 billion naira, positioning them to withstand shocks and support higher credit demand. This brings me to you, Daniel. What does this recapitalization progress now, because if you're looking at it, the 16 banks fully compliant, tell us about the true health of Nigeria's banking sector as we move towards the March 2026 deadline. What do you think of this?
I think that we are there already in terms of if 16 out of how many banks? I think 47 or thereabout. If 16 are these are compliance, and we still have about how many in process, I think to some extent that is a successful approach so far. I think we've seen one measure already, and we still have about 120 days to still see more of them do that. And so I think generally our financial sector is doing well in terms of the regulatory approach. Because we've also seen that the CBN earlier this year did what's the word, the policy around managing banks equity. I'm trying to get the name now. That basically ensured that they are not able to the single obligator limit, where where a single person is obligated to the bank too much, that exposes their cash flow. I think that for example, forbearance that's the word. So the forbearance policy that the CBN actually implemented, it really guided the transparency and accountability of these commercial banks, right, to maintain maintain the right standard for this capitalization policy. Because if the banks are not showing true growth, right, no matter how much you capitalize, you are going to be under serious risk in terms of financial stability. So
Okay,
with what CBN
Daniel.
has done,
Yes, please
yes,
hold
right,
that thought because Abiola
okay.
just joined us and would like to bring him on. You're welcome to the show, Abiola. With the CBN holding the MPR at 27%, how do you think banks are expected to balance stronger capital requirements with the challenge of lending at such high interest rates? Do you expect this recapitalization push and Nigeria's recent rating upgrade to significantly improve investor inflows and credit availability in 2025 to 2026? Abiola, can you hear me?
I can hear you. Can you hear me?
Yes, I can. Please go ahead.
Okay. I think the first thing is anybody in the world, any investor in the world will always be confident in a very strong structure. So the whole recapitalization, thing, it's a confidence booster, which naturally would bring in much more investment into the sector and into the country, as it were. Now, speaking about the MPR rates holding, I think basically it's just like what we call when you're doing experiments, okay, and your control, what we call control. That means we want to keep this steady while we see other variables, how they react. I'm sure in January or February, we're going to have some sort of maybe a change, a drop in interest rate. But for now, nearing the end of the year, having a lot of variables bouncing around, I think the government just wants to hold and see what those other variables will actually do. But yes, there's going to be a lot of capital coming in based on the recapitalization effort actually going on by the CBN.
Okay, thank you so much for that one. Now, away from the banking sector and monetary policy updates, let's move into a regulatory shakeup that is about to reshape Nigeria's fast-growing digital lending space. But let's take a quick break, and when we come back, we'll look at Nigeria's lending space as well as the market trends. Stay with us. But before then, up next, we shift briefly to Lagos for highlights from the ongoing Nigerian International Trade Fair, where key industries are unveiling fresh products and strategies for 2026. Let's take this report before the break.
The Nigeria International Trade Fair continues to serve as a vital platform for businesses and entrepreneurs across the country. For entrepreneurs, it provides an unmatched opportunity to introduce innovative products, test market response, expand networks, and attract potential investors.
Apart from innovate, like for instance, some of the messages, people that came to me yesterday, they were very excited. They've signed some MOUs already. People already are making contracts. Some of the women that they spoke with me, they're excited. Some people are even going back already because everything they brought has been sold out and they have made contacts to become regular suppliers. So there are a lot of things to benefit. And then people are learning how to scale up their businesses to international best standard. So many things to learn here, and I'm glad that despite the teething problems we have, despite the fact that we are coming back after decades of not organizing it, that things are working positively. That is the spirit of Nigerians.
Business owners attending the fair gain exposure to emerging trends, operational best practices, and strategies for scaling in a competitive economy. Beyond sales, the fair opens doors for collaboration and strategic partnerships, offering businesses the visibility and support they need to grow.
Being in the ECOWAS corridor, very close to the borders, we have a lot of people from Benin, from Togo, from Ghana to Abidjan. In fact, the caravan came all the way some months ago. From Abidjan, they drove all the way to Nigeria. So they have come to trade at this international trade fair. It's getting better. There's awareness, and now women are very happy. There's a lot of collaboration between us and the international trade fair.
This trade fair has given me a bigger picture of what to expect, how to prepare, what to see, and in fact, I'm so glad I participated in this trade fair. It was a wide and an eye-opener for me.
Nigerian International Trade Fair have tried for us by inviting us down here, and we have so much experience here. And so many people like our product, being it a handmade.
I get to advertise our products, like what we sell, so people can be able to know our company. Yeah, our company, Lesino cutting machine.
This trade fair is a bomb. It's a wonderful one. As you can see, I have to invest in this technical machine. This technical machine has helped thousands of customers.
The Nigeria International Trade Fair remains a cornerstone for business growth, a strategic hub when Nigerian businesses identify opportunities and forge partnerships in a thriving commercial ecosystem. Faith Oyewole for Rapid TV.
This is Rapid Broadcasting Network, RBN. We connect people, power stories, and amplify voices. On Rapid TV, we're rooted in culture and your window to the stories that matter. From news to lifestyle, we inform, entertain, and uplift. Join Rapid TV on StarTimes Channel 176, Nightcom Sat. On Rapid FM, we speak your language, from the soulful airwaves of Umuahia to the vibrant culture of Port Harcourt and beyond. More than broadcasters, we're creators, amplifying that voice within with powerful content across TV, radio, and digital. Join us at rbnradiotv.com and all our social media handles. One network, one voice. Rapid Broadcasting Network, RBN, the sound of your city. Rooted in truth, driven by impact.
Are you missing out on interviews, music, entertainment, thought-provoking discussions, and more? Don't sweat it, man. We've got you covered. No matter where you are, be part of the action 24/7, online and live.
Caesar Radio.
On Facebook, it's Rapid FM Umuahia. On Instagram, it's official Rapid FM. And on X, it is Rapid FM 965. Tune in to Rapid 96.5 FM or listen to us live on our website at www.rapidfm965.com or radiogarden.com. Better yet, get our mobile app from the Google Play Store. Catch the pulse of the Southeast on Rapid 96.5 FM, the sound of your city.
Hey, Oyanam, all Caesar Radio.
You are welcome back. My name is Divine Alex. Diving straight into it, where Nigeria's digital lending industry is bracing for major consolidation as the Federal Competition and Consumer Protection Commission, FCCPC, caps operators to a maximum of 5 lending apps with a strict compliance deadline of January 5, 2026. Many approved lenders currently run 6 to 8 apps, often under multiple brand names, making monitoring difficult and enabling data misuse, aggressive loan recovery methods, and opaque pricing. Under the new guideline, lenders must fully disclose every app they operate as part of license renewal, with undeclared apps risking license revocation, administrative penalties, or immediate delisting by Google and Apple. Registering more than 2 apps now attracts an extra fee of 500,000 naira per additional app, creating a financial push for operators to streamline and comply. So the FCCPC says the cap will reduce illegal lending activities and strengthen consumer data protection for millions who rely on digital credits. This is taking me to the question. Daniel, are you here? How significant is the FCCPC's 5-app limit in cleaning up Nigeria's digital lending sector, and what major operational changes should lenders prepare for?
I think that the FCCPC has been doing a good job when it comes to cleaning up. I think this whole campaign started late 2023 or post-pandemic, but I think more into late 2022 to 2023, where this whole push for digital lending becoming more regulatory and more consumer friendly instead of the very aggressive approach it was. A very high interest and very aggressive recovery model. But now with this policy, I think it makes sense because then what is the dynamics around having 7 or 5 different businesses doing the same thing, or 6 different businesses offering the same value? So why not just collapse everybody? Yes, you might want to do that as a business strategy to dominate your market, but when it is becoming more than 5, and then what model are you trying to drive? So I think what that's always been used for is just to fly under the radar and still operate illegally. But now with the declaration of it must not exceed 5. I think it should do a bit of cleanup. I think that the digital lending space should begin to brace up for more formal inclusion into the lending sector, because what they were largely informal, and the FCPC has been helping in cleaning them up to become more formal, and I think that will continue into 2027.
Okay, let me come to you, Abiola. Do you see this consolidation improving consumer protection, or will it temporarily restrict access to quick digital loans for low-income users?
Well, I feel it's good, and I think it would actually improve access, to loans, aside for digital lenders. I also think that they've been doing a good job, but now I think it's also the time for them to really go hard on these things, because we've had cases of people dying, from harassment, from taking loans from these digital apps. And we also have the knowledge that some of these apps are not actually Nigerian based, meaning that they are not owned by Nigerians. But one thing that always baffles me is this: if you really want to clean up the space, you always have to follow the money. These guys use Nigerian bank infrastructure, they use our transfer, NIBBS, and all that. So I don't think it's that difficult. If you cannot control Play Store, if you cannot control App Store, but you can control the money in the banking sector. So I feel that they need more powers to go out after them, or they need to do more, to also raise lenders and borrowers and confidence at the end of the day. But I think, yes, we are moving in the right direction.
Okay, from that one, let's dive into the markets. Let's take a quick look at how the capital markets reacted to the CBN's latest monetary policy decision. And the numbers tell a very clear story. This is taking us to the next story, where Nigerian equities lost 443 billion naira on Wednesday as investors embarked on aggressive profit-taking following the CBN's decision to retain the MPR at 27%. The NGX All-Share Index dropped 0.49% to 143,064.57 points, while market capitalization declined to 90.998 trillion naira, reversing gains recorded in the previous session, despite the bearish close trading activity surge, with volume jumping 32.76% to 738.35 million units, and value traded rising 89.89% to 35.54 billion naira. The sector performance was mixed. Insurance, banking and oil and gas advanced, while consumer goods and industrial goods, I think, dragged the market lower due to declines in large cap industrial shocks. Now, what does this say about our markets? Let me start with you, Daniel.
Okay, so I think what it just says about our markets is that
yes.
Can you hear me?
Yes, I can hear you.
Is that there is what we call fundamental analysis, and that the news definitely moves the market, and the reaction the reaction to what we should understand, that that interest rate increase is usually a good one for people in the capital market, because it is more interest for you, it is more rates for you. However, we are in an era of profit taking, right? And I think we need to understand the fact that and this is for investors, close to the end of the year, people want to take out their profits, particularly mutual funds, the hedge funds. Unlike you, the retail guy, that can decide to withdraw your funds at any time or sell your shares at any time. Some of them have to report to their investors what they've made for the year, right? So so most of them, no matter how down you see them at 0.16% losing, 2 point something losing, it is because it is the time of the year, and actually people need to take out profits. However, if you still want to make money in the market this time of the year, you can still go in very short day trading and still make your money. But for what I'm seeing from the all share index is that this year has been a very profitable year, over 40%. The all share index as at the start of the year was around 97,000 to 296, right? Around let's just cap it at 100,000 as at the beginning of the year, right? All share index was about 100,000 points, right? And now it is over 140,000 points, right? 145, 143, right? Even though it looks like it will end it at 141 or 140, but
yes.
it is still a 40% profitability to this year alone. So it is still a good year, and of course you also know that there's also a CGT, capital gains tax, that is coming up, that in hearing figures, we're talk that it might be reduced, but that is the cause of uncertainty, and everybody's just trying to take out funds and wait for whatever news comes out of that.
Okay, let me come to Abiola. What does the 443 billion naira loss tell us about investor sentiment following the CBN's decision to hold the MPR at 27%? And how well do you think this is going to package our economy going forward?
Well, going forward, what I see from it, and what I said the last time, is that since we see such large fluctuations, okay, in terms of people pulling out their capital, usually from foreign investors, what it means is that Nigeria should do much more work promoting the money, the money market, the stock markets, to be able to bring in much more local funds. Because at the end of the day, you'll see that majority of the local funds stayed even during the crisis, while a whole lot of the foreign funds were withdrawn. Now, why was that? Because these guys had, it was a concussion of things. Like, there were news from the US, there were issues locally. There are like three big factors that actually made foreign investors decide and say, oh, guys, let's pull out our funds for now. But if we actually promote much more indigenous and local participation in the stock market, I think that we can actually reduce this type of effect in the future. Even though money market is money market, things will always go up, come down. That is the way it is. Because if there's no volatility, nobody will make money.
Okay, thank you so much, analyst Abiola Adekunle and analyst Daniel Efa, for joining the show. And that's it on the Business Lens today. Join us again on Monday at 11 a.m. for another interesting take as we track the markets, money, and the moves shaping Nigeria's economy. I am Divine Alex. Thanks for watching, and don't forget to stay with Rapid TV. The Rapid TV News Hour comes up at 12. Stay tuned.